Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. The situation on the gold market right now is mostly interesting fundamentally rather than technically, because yesterday we finally have got the confirmation of our thoughts on this some sort of the artificial of current rally, since as you remember, within the whole this rally we said that we do not believe it, and it's mostly the speculative games because this rally has no purchases support. It's real demand support from the institutional investors. Yes, maybe some individuals, demand on the Asian region, and the Asian region has happened and still is happening, but that's not really sufficient for really thrusting action and reversal in the gold market, because the physical demand is the such sort of the basis demand that stands year over year. And as you know, the overall demand within the year on the gold stands approximately between the 5,000 and 6,000 tons per year. And this physical demand that is happening on some celebrations of the Asian holidays, the festivals in India, stands in this basis. But the driving factor of the gold prices is the inflation and expectations on the possible inflations, turmoils, different geopolitical uncertainty, and so on. And these driving factors mostly stands with the position of the institutional investors that stand above the normal physical demand, yearly physical demand in gold. And this basis is not increasing right now, so investors do not put new money and do not make any inflows in the gold market. That's why, as we said, sooner or later this recent rally probably will be doomed, just because no big players that buy gold right now. Yesterday we've got the confirmation. First of all, the recent earnings reports were really positive on the United States companies, particularly speaking. The Triple M and the Caterpillar has shown the really great results, and taking into consideration that this is transnational companies that work around the globe. This has made to think investors that probably this is not really a bad situation in the overall economy, in the global economy, as it was thought initially. Besides, by the Thomson Reuters data, approximately 70% of the companies have shown better results and better profit forecasts than it was expected by the investors, and that's really positive result. That could be said that earnings report was really positive for the United States companies. Yesterday's of the industrial activity data on the European Union also shows some improvement in better numbers that it was expected, and that has led to the drop on the gold market. Some uncertainty and worries of the investors have taken some relief, and this has led to a drop in the gold market. Simultaneously, as we have not seen any purchases from the ETFs and individual investors, so we still do not see them. We could say that's in fact a double impact, double strike on the gold market that has led to the drop in the yesterday's trading session. Right now, the major concern of the gold market stands with possible further development. So first of all, we could get as some kind of the ABCD pattern to the upside, maybe to 1260, 1275 area, or we will get the direct action to the downside. I'm speaking about the possible ABCD action, not because it will definitely will happen, and not because I already see the signs of this ABCD, but because from the technical point of view, if you take a look at the weekly chart, you'll see that it's nothing really curious and nothing really suspicious with this possible ABCD retracement. because as you remember, we've got huge ABCD pattern down. We have discussed this million of times already here. That's in fact the CD leg of this ABCD pattern, and 1260 in fact is just the 3-8 retracement of this move down. That's really small retracement of the big ABCD. As you know, it's allowable as possible retracement even to the 618 after the completion of the ABCD, and even 618 retracement will not deny the possible continuation of the extension of the ABCD pattern. That's why if even market will show some sort of the ABCD pattern, it will not break the long-term bearish trend on the market. And that's why here we will be extra careful with the possible retracement down and reversal up again. And here we will be watching for the couple of months. First of all, here we will be watching for a possible stop grabber. As you can see, maybe not today, but on Monday, the MACD predictor will meet the price, and if stop grabber will be formed, that will be some probability for appearing of the ABCD pattern, because you know that the minimum target of the grabber is taken out of the stop. That's the first point. The second point, on the next week we will get the Fed Reserve meeting, and that also could shed some light on perspective of the economy and could also impact on the gold market as on the one side as to the another. Okay. Anyway, currently we just can't ignore the possibility of the appearing of the ABCD. At the same time, in the long-term perspective, whether it will be ABCD or will not be this pattern, we still stand on the thought that in the long-term perspective, market will clear out of these lows. After that will happen anyway. It could happen anything, but before that, other words, it's better to say, we do not expect the real reversal in the market to the upside until these lows will not be washed out. That's our long-term view. In the short-term perspective, we will be watching for how market will respond in this area. But to be honest, guys, taking in consideration the strength of this plunge down, hardly market will show just straight retracement turn to the upside. It's most probable that this retracement down should be a bit deeper. It's probably 618, at least the 618, because gold market likes to show the deep retracement, and the deep retracement currently seems logical and followed by the market mechanics, because this first reversal swing of the huge plunge down and the previous bearish momentum still valid, and it probably should press on the market and force it to show the deeper retracement. That's why if even ABCD will happen, and it probably will happen not from here, but from the deeper level. But this is how market should work, because the geopolitical tensions, there's some news from the Fed could adjust this normal behavior, and that's why we still should be careful and watching for any clues that we could get on the market right now. Meantime, today we do not see any really significant chances to trade on the gold market. On the forward time frame chart, we see that market has broken the harmonic swing, okay, has moved below the weekly pivot point, and almost has doubled the distance of this harmonic swing. At the same time, it hasn't quite reached it totally, and you can see that the double of the harmonic swing stands approximately in the same area where stands the weekly pivot support one. That's why today probably we should be ready for reaching of this area, but what will happen next is difficult to say. Anyway, if you would like to take the short position, it's better for you to get some significant retracement before this will happen. Maybe some sort of the ABCD or something of that sort. But taking the short position here, it's a bit not very logical, because market stands near the support area, and it's really a small potential for the downward action. On the hourly chart, as we saw, said about the possible head and shoulders, but as you can see, market has plunged down more, and this scenario has not been materialized on the markets. Right now, I also do not see much that could be done here. Maybe market will show this small ABC retracement turn down. Take a look at the 127 extension of the whole butterfly stands approximately at the same area where it stands the double harmonic swing and weekly pivot support one. We do not expect some significant action on the gold market today, so it's really we just can't call you to make any trade right now on the gold markets. Probably we should wait a bit and see what will happen. So one potential pattern that we'll be watching for is possible snap grabber here, but most probable that we will be more focused on some a bit bigger picture on the gold market that has relation to the 1180s lows, but this will happen probably already on the next week. So that's been said, we do not see much that could be done here right now in the gold market, and it's probably better sit on the hands today, at least in the relation of the gold market.